Imagine a world without ATMs. No quick cash withdrawals, no balance checks at your fingertips. Now imagine a world without a reliable ATM. You get our point. Frustrating, right? That was banking in America before 1913. A financial free-for-all, a chaotic mess. Banks were small, local, and often unreliable. It was like a saloon brawl, but with more ledgers and fewer swinging doors. Imagine the chaos of a Wild West saloon, but with your money at stake. Back then, individual banks issued their own currency. Each banknote was a gamble, a promise that might not be kept. This wasn't as cool as it sounds. It was confusing and often unreliable. Imagine trying to pay for a beer in Texas with a banknote from Maine. The bartender might not even recognize it. Good luck with that, friend. You'd probably be refused service. This system led to confusion, instability, and more than a few hangovers for the economy. People didn't trust their money was safe. Panics and bank runs were as common as a 10-gallon hat. Financial stability was a distant dream. 1 minute, you're withdrawing your life savings. The next, you're in a line hoping the bank hasn't run out of money. The next minute, the bank's doors are closed and the banker's nowhere to be found. Your savings, gone. It wasn't a great time to be a saver or, a fan of economic stability. The financial landscape was a minefield. Enter the Federal Reserve in 1913. This was a pivotal moment in American financial history, and one that had previously been thwarted more than once. The government's answer to this financial rodeo? A central bank. It was promised to be the backbone of the nation's financial system. The idea? Bring some order to the chaos, provide stability. But the reality was different. The Fed introduced fractional reserve banking, a system where banks only keep a fraction of deposits on hand. This system allowed banks to lend more money than they actually had, creating a deceptive sense of security. Interest rates became a tool for manipulation, and deception often benefiting the few at the expense of the many. The Fed was tasked with controlling the money supply and supervising banks, but this control often led to economic imbalances. The rules were good for me, but not for thee. Think of it as the sheriff strolling into that saloon brawl we mentioned earlier. But instead of restoring order, the Fed's policies sometimes exacerbated the chaos. This new sheriff came armed with new rules. Standardized currency and reserve requirements were introduced, but they often favored large financial institutions. Tools to manage inflation and interest rates were used, but these tools often led to economic disparities. Mortgages, or death pledges, became a one-way monetary flow. Unlike the more flexible line of credit style that existed before the Fed, the new death pledge mortgage became a one-way flow for people's money, limiting their ability to easily capitalize on their equity. It was a whole new ball game, folks. The creation of the Federal Reserve marked the beginning of a new era in American finance, one that continues to evolve but not always for the better. Fast forward to today and the banking landscape looks a tad different. Gone are the days of long lines and tedious paperwork. We've got FDIC insurance, so your money's safe, mostly. This safety net has given consumers a sense of security that was once unimaginable. ATMs spit out cash like there's no tomorrow. These machines have revolutionized how we access our funds, making banking more convenient than ever. And online banking? It's about as ubiquitous as bad reality TV. With just a few taps, you can transfer money, pay bills, and even apply for loans. The Fed's still around too, pulling strings and keeping the puppets dancing. Their policies impact everything from interest rates to employment levels. They've had their share of successes and failures, mind you. Each decision they make sends ripples through the financial world. But one thing's for sure, banking today is a far cry from the Wild West of yore. Regulations abound, touting a more stable and secure financial environment. Consumer protection laws are a thing now. These laws are supposed to safeguard your rights and ensure fair treatment in financial transactions. And banks are bigger than ever. These financial giants dominate the skyline and play a crucial role in the global economy. Whether this is a good or bad thing is a topic for another day, folks. The debate continues. But one thing is clear. The banking world has evolved dramatically. So, there you have it. A whirlwind tour of American banking, from its lawless beginnings to its heavily regulated present. Has it been a smooth ride? Nope. Are there still challenges? You bet. But one thing's clear, the establishment of the Federal Reserve marked a turning point in American financial history. The perceived safety promised may or may not have fully come to fruition, but the deception has been rampant. Luckily, there are a few of us left that can guide you back to effective methods of making your money work for you and not just benefit the banks. Now, if you'll excuse us, we're off to find a saloon that accepts out-of-state banknotes. Wish us luck.